Welcome back, everybody, to another episode of The Real Improvement Show. Gus, as always, it is so good to see you, man.
Good to see you too, Dave.
I got to tell you, man, I really enjoy doing this. I really enjoy.
It's so much fun.
I really enjoy getting all this information together and putting it out. And I feel like, and maybe I'm wrong, but I feel like we have such a good time doing this, man.
I agree.
And I'm glad to do it with you. Tell me what we got today, man.
Well, we are bringing even more value, can't speak today, to our viewers and, the homeowners specifically, obviously. We are back with the one and only Arlene Hale, where we discuss even more taxes, slightly different than the first episode that we did with Arlene. Arlene, thank you and welcome back.
Welcome back.
So glad to have you again.
Thank you. It was really fun.
Well, we're going to have more fun today.
Whoa.
Just you wait. We're going to have more fun today.
Oh, yeah.
I can hardly wait.
I love it. I love it.
I mean, it's all about taxes. Like how much, how much more fun can I get?
That's right.
So let's take a moment. Tell us how did you get here? Walk us through
My car.
I knew it was coming. I saw it. You walked right
I
into it.
should have known better not to ask that question.
I'm
You
sorry.
walked right
I
into
couldn't
it.
resist.
I love it.
I'm referring to the background here, right? Like how you got to where you are
Yes.
in your career doing taxes.
I understood what you meant,
I know you did.
but I couldn't resist.
First of all, how long have you been doing this?
You really want 35 years, but
That's
don't tell
it?
anybody.
Okay,
Your
we
secret's
won't.
safe with us. It's fine.
All right, so take us 35 years
I
ago.
decided to do taxes. Years ago, I worked for two CPAs on Long Island, and if anybody didn't notice, I'm from New York. From
you are?
From Long Island. Yes, and I drink coffee.
Nice.
What is that? I'm just kidding.
And I always enjoyed taxes. I worked at the desk. I was the secretary. And then when I moved down to Maryland, I decided to find out more about taxes. And I took the H&R Block tax course, and I worked for them for 17 years. At that time, then I decided other things happened in my career, so I decided to start my own business.
Nice.
And in 2002, I started Hale Accounting Services. At that time, I decided to do taxes and bookkeeping at the time to kind of help bridge everything. And about 10 years ago, I stopped doing the bookkeeping and I just do the taxes. In 10, I think it was, I became an enrolled agent.
Nice.
And the rest is history.
And here we are.
Yeah.
Here we are.
Here we are.
Yeah,
So-
this is such a hated topic. I hate to put
And I
it
love
that way.
it.
And I was going to say, I've never seen anyone that loves taxes more than you do.
I don't
you-
like paying them.
Do you know what
I just
think
like
it's-
preparing
I
them.
think it's so hated because I think that people are generally, first of all, they're not very knowledgeable, right? Which
Well,
is
I
why
think
we
that's
have folks
really
like
what it
Arlene.
is, right?
And also, I think a lot of times people are kind of, for various reasons, maybe they're a little bit unprepared, right?
Yeah.
And I think that's what, and you hear all these horror stories of dealing with the IRS and,
Yep.
how ridiculous that can be. And maybe it doesn't always have to be that way if you've got,
Someone like Arlene?
someone like this lady over
That's
here.
right.
You know what I mean?
That's right.
So, I think that last time we had you on, we were talking a little bit about tax preparation, right? What people
Yes.
can do. Well, we're coming up on a little bit closer to that illustrious deadline, if you will.
Excuse me, let me interrupt 1 second.
Whoop.
The deadline this year,
Yeah.
there's no extensions, regular extensions. Tax season ends April 18th.
Because
And the 15th is a Friday,
Got it.
and the 16th is Emancipation Day.
Right.
So they're celebrating on Friday, so we have till the 18th.
Wow.
And
That's
then
good to
you
know.
can file an extension, which is until October 15th.
Sure.
But the basic IRS deadline is April 18th.
You heard it,
this year.
folks. Don't
Yep.
delay. Get those taxes filed. So I think with that, right. Let's talk deductions, right? I mean, everybody is talking about how to, I guess, quote unquote, reduce their income, or maybe I shouldn't have even put that in quotes. Maybe that's what it actually is. We hear oftentimes about tracking expenses, like myself as a business owner, Gus as a business owner, right? You hear about tracking things as it pertains to, certain expenses and things like that. But then you also hear about the standard deduction, right? So I'm curious, what are some deductions that people are taking, some of the common ones. I'm curious, and I'm just going to spit it all out there. I'm curious about, are there deductions people should be taking that they aren't because they're not thinking about? Let's really kind of set people up for success here.
Okay. If you're going to itemize, and it would be on Schedule A, the first portion of Schedule A is medical. Hopefully you're all healthy and you don't have to use it.
God willing, right?
Correct. Yeah. I've had clients saying, "Oh, I got a lot of medical this year. I had almost $2,000." Well,
for some people, that's
right. It is.
Yeah, absolutely.
But the first 7.5% of your income. So if you made $100,000, the first $7,500 is not deductible.
Interesting.
Anything above that, you can deduct, and that can be added on to the rest of your itemized deductions. So look at your medical. If you've been healthy, and I hope you have, then great, we don't have to do it. As I've said to clients, the next question, the answer I want to hear is no. And they look at me and I said, "Did you have more than X amount of dollars in medical?" No. Good answer.
Yep.
Then we have taxes. Now, taxes are on your federal return. You can deduct your state withholding tax, your real estate taxes, personal property tax, things like that, any other tax. They are limited to $10,000.
Interesting.
And there was talk that they might boost it up this year, but they haven't. The next item on your Schedule A is your mortgage. You can take whatever interest you've paid on your mortgage. I think it's limited to, I forgot the exact amount. It's like $1 million or $750 or something like that. It's high.
Right. It's a big number.
You can deduct points when you purchase your house.
Oh.
You can deduct
points from the mortgage, you mean?
Yes.
Interesting. Okay.
You can deduct if you've refinanced and you paid points when you refinanced. You can amortize that. You can't deduct it. If you have a 30-year mortgage, you would spread the points out over 30 years and take a portion each year.
Interesting.
And then the next portion on the form would be your charitable contributions that you can deduct. It used to be another section up until 2018 when they had the reform, a tax reform, that you could deduct investment fees, preparation fees, things like that. You can't do that anymore. That is not deductible. If you had losses, gambling losses, you can take gains up to your losses.
Oh, wow.
No, I said that wrong.
Losses
You can take your losses up to your gains.
Yep.
That's the way.
Okay.
Excuse me. Your losses up to your gains. Otherwise, everybody.
Right?
No, you can take your
we
losses
got it.
up to your gains. Your gains you would put on the 1040, and then your losses on the Schedule A. And that's basically your deductions. A lot of people, I'm going to go back to the medical. A lot of people don't realize, and I'm talking more towards the seniors, that your Medicare expenses are deductible. Everybody, if you have a lot of medical expenses, your premiums that you pay are deductible if they're not tax-free. If your employer has a plan, tax-free, then you can't. But all those things are deductible. Co-pays, doctors, dentists, eye glasses, eye doctors. If you have mental health situations, that's deductible. Another thing a lot of people don't realize is that you can deduct if your doctor says you need to go to a gym, you need to do this, those are deductible.
So how do you
providing
deduct that? Do you just ask for a letter from
the
the
doctor would
or-
have to, yes, you'd have to have that for your supporting documents.
In case you get audited, you mean?
Right,
Okay.
correct.
Sure.
Correct. Things like that are deductible.
So let's put things into in a simpler form, for example, right?
Mm-hmm.
Like myself and everyone in my family, we all wear glasses, right?
Mm-hmm.
So how much of each pair of glasses can we deduct?
Full amount.
Full amount. Wow.
Providing you all your medical expenses come to in excess of 7.5% of your income.
So for $100,000, anything. So if the glasses
anything
are,
over 7,500 would be
7,500.
deductible. Yes,
So for a lot of us, though, I mean, thank goodness, a lot of us that
correct.
it doesn't count, right?
Right.
Because thank goodness we
Right.
don't have those kinds of expenses. But it's
Sure.
really important for people that have some real health issues. I
Yes,
mean, that's
yes.
a lot of money.
I had a client who got audited. It was like a paper audit. The IRS sent them a letter saying, we need the backup for your medical expenses. Well, as it turned out, he had every single thing.
Good.
And we made copies of everything, and we sent it to the IRS and never heard another word.
Interesting.
wow.
So as far as that goes, right now, let's kind of jump into, we hear about these standard deductions, right? It sounds to me like there's a certain amount if you are married versus a different amount if you're single. So is it where people should be looking at these itemizations, if you will, right? And then comparing it to that deduction? Is that typically what we're doing?
Yes. The standard deduction, and I don't have my numbers in front of me, but
Sure.
it's let's just use $25,000 for a married couple. It might be $25,500. I'm not sure. Let's say your itemized deductions come to $30,000. Well, you're going to take your $30,000 versus your $25,000.
Sure.
If you had, let's say, $24,000. Oh, I'd rather take 25 than 24, reducing my income by an extra $1,000.
Yeah.
But you got to think twice, because maybe it would be advantageous for you to take the itemized deductions, that 24 versus the 25, because when you do your state return, you might, now I can speak for Maryland. I think the standard deduction for a married couple in Maryland is $4,500.
Yeah.
Well, if you itemized and you had a mortgage and you had real estate taxes, that would probably come to more than $4,500.
Sure.
So if you took that $24,000 on the federal, your itemized deductions on the federal, you can take your itemized deductions on the state.
Same dollar amount.
Well, with the exception of what you paid into the state.
Okay.
You can't take.
Sure.
So let's say you paid $10,000 into the state, that leaves you $14,000.
Right.
$14,000, as far as I'm aware, is a lot more than $4,500.
Well, you're the numbers lady, so you would know, right?
So I would do that. And I play with the numbers to see which way. Maybe you'll get a couple of dollars less on the federal, but you'll get a whole lot more on the state. I work it both ways to see how you, which way
Which
comes
is
out
more
better
convenient.
for you.
This is why it's so important to talk to somebody that knows what the heck they're doing,
I
right?
was just
Because
thinking
I
about
never
that.
would have thought, like you think, okay, we'll just take the standard deduction because it's more money, right? Just what you were saying. And I never would have thought about how does that compare to
Yep.
my wife probably would have thought about it. I wouldn't have thought about it,
Sure.
right? And you hear stuff like that and you're like, it's like a light bulb moment,
Yeah,
right?
I mean, Arlene, you're in the industry. Realistically, do all tax preparers do that? Or
No. I think a good tax preparer will.
I got you. Or should, right? At
And you
least.
know,
Right.
here's a situation: if you use TurboTax or one of the other softwares, they probably will not. You know, they say, "Oh, you made 24. Okay, you'll take the standard deduction of 25, and you take the 4,500 on the state."
There's no
and
prompting.
there's nothing there. So a good tax preparer will be aware of this, and they will do that.
So there's probably a lot of situations where people are just leaving money on the table. Right?
Yeah.
I was going to say, this just confirmed that, anybody or everybody should really hire someone like you to prepare taxes.
Thank you.
And shouldn't do it themselves. I'm being serious.
I agree.
So jumping over just a little bit, right? told you I wasn't going to, but I wound up preparing you for this particular question, right? We talk about leaving money on the table, right? And how those, deductions, whether it be itemized versus standard and which is going to make more sense, right? So then we hear that word refund, right?
Yeah.
The big R word. Everybody wants their refund. But then there are a lot of people that they say, and they may be right, you're gonna hopefully clear this up for us, that it's not a refund, it's your money that you basically loan to the government interest free, right? So we, first of all, you hear about these deductions and how to balance that to make sure you maximize that return, because in I guess in essence, you're trying to get as much of your money back as you can, right? So is it a refund? Is it an interest free loan to the government? What are your thoughts on that?
Well, everybody likes a refund.
Yeah, sure. Yeah.
Oh, there is a small amount who don't want a refund. They want either break even or owe money, because they don't want IRS to have this interest-free money.
Right.
And that's fine if that's the way they feel. A lot of people want a refund. Okay, granted, it is their money, but they depend on that refund. Absolutely. I've had clients saying, "Oh, now with that money, I can get 4 new tires for my car."
Absolutely. I mean, in my industry, people wait for refunds
Yes.
to do roofs, to do kitchens,
Sure.
to do. I mean, I literally had 2 customers yesterday alone waiting for their refunds to do home improvement.
Wow.
They're
Correct.
just now getting prepared to do
there's
projects.
lots of people. I would say almost the majority of people are looking for that refund, and it is worth to them to get it. Let the government have that extra couple of dollars in interest that they would get, because if they were to break even, so to speak, that money would have been spent on something else.
Yep.
And when they would need it, they wouldn't have it.
Absolutely.
And that's the way they look at
It's
it.
like a peace of mind thing.
Exactly.
Correct.
Yeah.
Correct.
I get it.
Sure.
Now,
Absolutely.
and ideally, you want to break even. People want to break even. I did years ago. I had a client who owed $1 to the federal and got $1 refund on the state.
Get outta
now
here.
that's what you
What?
call breaking even.
Yeah. Wow.
That's crazy.
That's unreal.
Once in 35 years, that's happened.
Unbelievable.
That's crazy.
Unbelievable.
Another question for you. So, what other deductions or programs are out there when it comes to energy efficient products now? I know back in the day there was a deductions for energy efficient windows or
Right.
solar
There-
panels.
yes,
right,
there.
right.
There's still some out there. In fact, a client just asked me about they're going to buy an electric car, and so I got to do some research on it. They want to know how much of a deduction they would get if they get an electric car.
Yeah.
If you got solar panels and stuff, there is a deduction that you can have on your federal return.
But are you aware in specifically which items for the home that have deductions?
It used to be if you got a new water tank and stuff like that, but that's not in there
Yeah,
anymore.
because I think
to my-
especially for energy efficient windows,
Yes.
I know they took that away years ago, and
it's more your really high tech
yeah,
stuff. I haven't had anybody in the last. I'm trying to think if I had anybody last year. I don't think so. The last couple of years have been a little bit different
sure,
because of COVID.
To say the
So
least.
what is normal anymore? I don't know.
Yeah,
But if somebody has something that they think might be deductible, I would present that. Bring it to the table, so to speak.
Yeah.
And like I said before, I'd rather you bring too much than too little.
yep,
I mean, worst comes to worst, they
Ask.
can't use it, right?
Right.
Right.
At least we know.
So
Right.
they tried.
yeah,
And, but if they if it had been deductible and they didn't mention it, well, it works both ways.
yeah, absolutely.
Now, you can amend a return. You can go back 3 years, but that's all.
Got it.
IRS can go back 3 years and audit you. And the only time they can go back further than 3 years is if they think there's fraud involved.
Sure.
So if you're not committing fraud, then they can only go back 3 years.
Right.
So
Right.
the
But you
trick
can
here-
only go back 3 years.
The trick here is don't commit fraud.
That's right.
Let me ask you. I think it's a fun question. It'll be a simple one. I think you'll think it's a simple one, right? As a real estate agent, I'm in my car quite a bit, driving around to listing appointments and showing homes to prospective buyers and things like that. So, which is better, deducting the cost of the gas or deducting the mileage on my car?
Mileage.
Yeah.
And I'll tell you why. Because your car is not used 100%.
That's right.
For business.
That's right.
Yep.
So, okay, you total up all your gas, you total up your repairs, etc. And whatever that, you think, oh, that's so much more I can deduct. But guess what? You got to only take the percentage of what you use your car for.
So if it's like 80%, for example, right? Like my car's about 80 to 90%, depending on when,
So you'd have to deduct that part.
Okay.
But if you take the mileage, mileage is calculated on the percentage of your mileage that you use for business. So if you, first of all, let me just interject this, that I will not, under any circumstance, take 100% of usage of a vehicle for a deduction. I will not do it.
Let me run another scenario, not to cut you off. For an example, we have company vehicles. Those are 100% job site miles. They're 100% work miles. Our crews
and
don't
you
use
have
it
other
for
crews
personal use.
using it.
I hear what's coming here, though. I hear what's coming.
The problem I present is, did they ever stop and buy some coffee? Did they ever stop and pick up something at the grocery store? That's not business.
I knew it was coming.
That's not business.
Realistically, so I get it.
Realistically?
I don't disagree with you.
Realistically?
I don't disagree.
Okay.
And so the reason why I say this is because they pack their lunches and they bring their coffee and they have everything on the truck with them, right? So they literally do not stop
But
for
that's
anything.
called, you have a fleet.
But I'm with you.
You have a fleet.
Correct.
Basically with individuals
Yeah.
like David.
Yeah.
Okay.
Oh, I'm an individual.
We know
A
that.
special one, that is.
I will not. I've had clients come and say, oh, I take 100%. I'm sorry. I do. Honest.
Yeah.
Did you ever stop at the grocery store? Did you ever stop and get some coffee? That's not
What if
business.
that's on the way, though? I'm kidding.
I know. But
You're one of those, huh?
you know what?
Totally.
That is called a red flag.
Yeah.
That is
Absolutely.
called, and that's a red flag that you're waving.
Absolutely. I'm with you. I don't disagree
So,
one bit. I'm just asking for
with
general information,
Right. But you don't want to take 100%.
Yes, I agree.
Yeah, that makes sense.
And
Don't take
mileage,
100%, people.
a mileage is, if you take mileage and you had 10,000 in business miles, I think the mileage is 55.5 cents a mile.
It's 5.5 now.
I think so. And people might say, well, why doesn't she know? She does taxes. Well,
It
they
changes all the
change it.
time.
And I haven't really gotten into this year's that much yet.
Yeah.
But, and there's other things that take up my brain.
Wait, you're a real person?
Sometimes.
Really? She's a real person.
Yes,
Sometimes
you
I'm
is.
a robot.
As we get into tax season,
Yeah.
right?
Right.
Yeah.
So it usually comes out, I would say probably over 95% comes out better if you take mileage.
Yeah.
And one other thing, if you take actual, you have to use actual from then on. If you take standard deduction, you can take standard and then the next year try actual and then go back to standard. But once you start with actual,
Stick to it.
you don't have a
You have a
choice.
choice. Oh,
Yeah,
wow.
yeah.
Okay.
Yeah.
Interesting.
So
I will tell you that, first of all, I learned a lot of things today, but let me tell you what I really learned. I learned, and I will reiterate, it's the same thing I learned the last time Arlene was here. Get somebody like Arlene to do your taxes. I mean, there's just
100%. 100%.
I mean, the amount of stuff. I know the amount of stuff that I need to know for my industry, and then to think about all of the stuff I would have to remember to do her job. I'd rather just have you do your job. I mean, right? It just unreal.
But we learn every
Absolutely.
day.
Yeah, for sure.
You know,
For sure.
and I have a great tax program in my computer that I really like. And it helps me, and I can do, I double check things. And I'm going to just put a little plug in for myself. And I think this should be, anytime you go to somebody, and as a professional, they should probably adhere to the same thing. If, we're all human.
Sure.
And it's humans who are putting the info into the computer. Mm-hmm. We make errors. Mm-hmm. If I made an error on your tax return and it caused you to have to pay interest and penalty, I will take care of that.
Wow.
If the error was because you didn't give me the information,
That's different.
then it's your responsibility.
Of course.
But if I made the error, I will pay I don't pay the tax,
Right.
Because you would have had to pay it anyway.
Right.
But I will
Absolutely.
pick up the interest and penalty.
That's more
Wow.
than fair. More than
That's
fair.
And that
so
is
much
fair. I
about
mean,
you
if
and
it's my
your
error, I mean,
character.
hopefully I don't have too many of them. But I mean, we all are human.
Sure.
Even David.
No,
I was going to say,
definitely
I
am.
think that's questionable, but okay.
Look, to what Gus was saying, it totally speaks to your character. Not only are you an amazing tax preparer, you are also an amazing person, and I am privileged to know you. So
Thank you.
I feel the same way.
And I'm looking here at two great guys.
Where?
So right over at someplace.
That's awesome.
All right, that's great. Anything else you guys want to discuss on deductions?
I think that, I think there's always going to be questions, right? And I think that there's always going to be something. So what I would encourage is like last time, Arlene's information is going to be in the description of this video. And like with every video that we do, I think it's so important that if people do have questions, drop them down in the comments, reach out to us directly, reach out to Arlene directly. We'll definitely get all that answered for you. We'll get it all taken care of.
Absolutely. So I got to ask you again, Arlene, how can people reach out to you?
Great question. My email address is Arlene, ARLENE, at Hale, HALE, accounting.com. And my phone number is 301-740-3344.
Awesome.
Love it. Thank you so much.
Such a
All
pleasure
right.
Thank
having
you.
you. Thank you, Arlene.
All right. That said, this concludes our episode for today. Guys, if you have any comments, any questions for either one of us, we're happy to answer them for you. Also, if you want to learn about a future topic, also leave it in the comments below, and we'll see you on the next one.